No! No! This can't be!
No!
California Democrats want businesses to give up half of their tax reform, tax cut savings to the state of California. These guys are good. They want to screw. Oh, I can't wait
To get to California.
I'm gonna give these guys a piece of my mind.
Hold me back. Hold me back, Trump.
And if things can't get any worse, San Francisco's human poop map shows the city is in deep poo-poo. Oh my gosh, that's too funny. That's too good. There's a bunch of crap going on over there in California, apparently. But these guys, I can't believe them. They want to, with the tax reform, they want to take even more money. What is happening here? What? Travago? No, I don't want Travago. California, they want citizens to cough up even more money to the state of California because they're getting a tax break from the federal government. What kind of garbage is this? This can't be. What do these guys think? What do they think, we live in China? Wait a minute.
Let's say China, 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 China. I could say China.
So there you have it. That's the craziness that's going on here in the United States. Trump passes a tax reform to help people and businesses save money, and California wants to do all over that tax reform.
It's just not right, Trump. It's just not right.
They're trying to take money from small business owners all across the United States, and especially in California. California just can't help but try to continue to take other people's money when our federal government is trying to give it back. All right, so here's what we're going to do. In this video, we're going to talk about the top 10 things in Trump's tax reform that's going to affect you the most, whether you're a business owner or whether you're an individual. If you're a business owner, this is great news for you. If you're an individual, this is great news for you. So we're going to talk about the top 10 things that are going to impact you the most. So if you have an S corporation, if you have a partnership, if you have an LLC sole proprietorship, if you have any kind of real estate activity, that's one of the biggest things of Trump's tax reform that's going to be beneficial to you in 2018 going forward. If you're an individual, there's some awesome things that are also going to happen at your level as well, especially if you don't have a business, and if you do have a business, even more so. All right, so let's start with the first one, standard deductions and personal exemptions. This is something new in Trump's tax reform. In 2018 going forward, the personal exemption by individual or by person that's on your personal tax return is going to go away. So for single filers, you're just going to get a total of $12,000 deduction. So if you're a single filer, generally your deduction would have been about $10,000. In this tax reform, it's now $12,000, so it kind of goes up a little bit. Where this actually kind of works against you is when you start to have more than one child. So if you have one child, on the old 2017 model, you actually would have had a bigger deduction as an individual. Same thing with the married filing jointly, $24,000. This is great. This is a little bit more than the norm if you're married filing jointly. But where this starts to work against you is after one child. When you have two or more children, this deduction is actually a lot less than what 2017 and prior years used to be. So while this may work for a lot of people, it may also work in the reverse for a lot of other people who have larger families. Okay, here's the second one, the income tax brackets and the rates. Basically, the income limits and the tax brackets were all adjusted for inflation, and the tax reform was able to lower the percentages of tax per bracket. And not only that, he widened the brackets as far as the dollar ranges, which means you can make more money. So that was also a big benefit to families all across the United States. So really don't see any kind of drawback to this other than, you know, as far as the brackets are concerned, that is still having 7. That's the only drawback. Congress was not able to get it down to 4, but we were able to lower the percentage rates by bracket and you can make a little more money and pay less tax on that money that you're making. All right, here's the third one, the child tax credit. The tax reform actually increases the child tax credit from $1,000 per child to $2,000 per child. My home state, Marco Rubio, he was really campaigning hard on this to make sure that the child tax credit went up. And I think I know the reason why. Is back in point one, if you have a family of one or two, the exemptions start to go away, or actually you don't get exemptions for that. There's just a max deduction that you get. So with this child tax credit, by increasing this, it's a way to accommodate for the exemptions that are going on. I believe in certain situations the credit is actually worth more than the exemptions that you would get for additional children. That is, if you had 4 children, it's better to get $8,000 of credits than it is to get, $16,000 of an exemption. Because the exemption only reduces your taxes as a percentage, whereas the credit is literally a dollar for dollar back money refund on your tax return, which I think is better. So, but anyways, it's from $1,000 to $2,000 from 2018 going forward. So feel free to have as many kids as you like, because they're worth $2,000 a pop according to the IRS. All right, so this fourth one is actually really interesting. The mortgage interest deduction that you would get from owning a house. Basically, the tax reform said this, that if you end up getting or buying a new house starting 2018 going forward, you're only allowed to deduct the interest on that mortgage for homes that you have mortgages on no greater than $750,000 of debt. So if you buy a house that's worth, let's say, $600,000 and you get a mortgage to buy that house, then that's okay to deduct that interest from that mortgage. But if you buy $1 million home that's over the $750,000 threshold, which actually the interest deduction that you would get from that home would not be allowed. Now, a lot of people were kind of up in arms about this one, but this actually affects the wealthy more than the not wealthy. So obviously, if you're not wealthy, you can't afford a $1 million house. Many Americans don't have $1 million houses. They have, $200,000, $300,000, $400,000, $500,000 houses, and that's reasonable for the average American. This law does not affect them. This tax reform does not affect them. But if you're super wealthy, or this has more of an impact on the wealthy, so if you buy $1 million home or anything more than $750,000 and you take out debt to put a mortgage on that house of indebtedness greater than $750,000, then this piece of the tax reform will affect you, and you will not be able to take the interest deduction. Any HELOCs or home equity lines of credits, any interest that you pay on that, no longer deductible. That totally gets wiped out in the 2018 tax reform. All right, so let's actually pivot over to the business side of things. There's a lot of reforms that happened on the business side of things. Clearly, it was meant to cause some sort of economic boom, because businesses are obviously the driving factor of hiring employees and driving the economy. So in the tax reform, there's a lot of things that are going to affect businesses, even small business owners like yourself and myself. One of the first things is Section 179. If you've never heard of this term, I'm not going to snow you over with this complicated terminology. But basically, if you buy things, the deduction for buying those things are maximized to a deduction of $1 million a year on the first $2.5 million of qualifying equipment that you place in service. Basically, you can write off things in the year that you buy them, especially very expensive things. Not only that, but to improvements of non-residential real property, roofs, alarm systems, heating, ventilation. In the industry, it's called HVAC items. But basically, this Section 179 was increased. The dollar value was increased. So if you're buying equipment for your company and you have not heard of Section 179, be sure to speak to your tax professional or talk with us, and we'll help you make sure that you maximize this deduction for your business. All right, now this one's actually really good. It's called bonus depreciation. It's really similar to that Section 179. Basically, businesses are now allowed to immediately deduct 100% of the cost of property that they're buying in the year that you buy them and in the year that you're actually placing them in service. And then in the tax reform, starting in 2023, it's going to start to slowly phase down 80%, 60%, 40%, 20%. And so what this allows us to do is to take bonus depreciation in the upfront years and then slowly phase it down over the next latter years. If you don't know about this, be sure to ask your tax professional about bonus depreciation, and you can actually pick up this deduction, and it will lower your taxable income, which means that lowers your taxes overall. All right, number 7, basically the corporate tax rates, if you have a C corporation, the corporate tax rates have been reduced. So starting 2018, the highest rate that C Corps were paying were 35%. That was actually dropped down to 21%. So it's a flat 21%. Also, the corporate AMT tax, the alternative minimum tax, is totally repealed, which is a huge benefit for C Corps. So a lot of people are not C Corps, but publicly traded companies are. Sometimes some startups out in the valley, you know, if you have a startup, or there's some purposes where you would want to be a C Corp, but basically the highest corporate rate of 35% was reduced to 21%. Okay, number 8, so entertainment expenses and meals. Now, I will admit this was a huge blow for businesses. So the tax reform took away some benefits of writing off entertainment expenses and meals. Basically, all entertainment is now disallowed as far as you can't deduct it. And now all meals are treated the same, 50% deduction. So generally before in the past, you can actually take 100% meals deduction if you bought food for your office, or if you bought food for your staff or your employees and you wanted to keep them working late, that was 100% deductible. But under the new tax reform, it's now all of it's being treated as with clients, 50% deductible, or whether you buy food for your office, also treated 50% deductible. So this was a huge blow to small businesses who spend a lot of money in entertainment, amusement, recreation, ball games, that kind of thing, clubs, pleasure, recreation, other social purposes. So that got totally repealed from the tax reform, and all meals got treated as 50%. Okay, number 9, net operating losses. This was another blow against C corporations, or companies that pay corporate taxes or have corporate losses. Basically, the tax reform included this loss limitation where you can't go back 2 years and apply those losses to prior year performance or prior year taxable income. Also, starting 2018 going forward, if you do have a loss, you can only take 80% of that loss, or you can only take that loss up to 80% of the net income, which is another limitation. The reason why I think this is probably in here is because the corporate tax rate got slashed from 35 to 21, so this was probably a compromising ground where they said, okay, if there's companies that have losses, they can't go back 2 years, and we're going to limit their losses on taxable income going forward from here on out. All right, number 10, last but never least, small businesses or pass-through deductions. This is a really huge benefit in the tax reform for companies who are treated as pass-through companies like S corporations or partnerships or LLCs, or if you're a sole proprietor, real estate. I mean, if you're doing Uber or Lyft or selling things on Etsy, or you just have your own little small business, or if you're like me, a small accounting firm, this part of the tax reform is going to be huge for that kind of corporate setup. And the purpose of this is obviously to get more money back into the hands of small business owners so that they could reinvest or pay themselves more, or pay their employees more, or buy new things. But basically what the tax reform says, if your pass-through company, if your small business has net income, what it's going to do is it's going to take 20% of that net income and deduct that amount up against the net income. So for example, if you had a net income of $100,000, then you would take $20,000 away from that 100, and your net income would be $80,000, and that's what you would pay taxes on. So, this is really huge for business owners and small business owners, because it's another avenue, it's another opportunity to try to lower your taxes and try to get more money back as small business owners. So if you don't know how to utilize this, or if you're not a small business, or you're not incorporated, or you're thinking about starting a business, be sure to schedule time with us. Down in the description below, there's a link that you can schedule free consultation time with us. But this part of the tax reform is really huge. We're really excited about it, and the things that are going to come out of this piece of the tax reform. All right, guys, that's it. Those are the top 10 things from Trump's tax reform that are going to affect you here in the United States. I'm glad you watched this video. If you haven't subscribed to our YouTube channel, be sure to subscribe right now down below. We're going to release weekly videos for your benefit and your benefit alone, and we'll be sure to catch you guys at the next video.
Thank you for watching. Be sure to follow us for more business and tax reform information. Hit the button below to follow. Hit the video over there for more. If not, I am going to touch your spaghetti. Thank you, America, and see you at the next video.